Yesterday, you learned the building blocks of uptrends, downtrends, and also sideways trends there. And today, I'm gonna give you one price, okay? And as long as price is holding above it for uptrends and below that level for downtrends, okay, those respective trends are going to be alive. The second we break that price point, it's done. Okay, that's the whole video that we're gonna have today. And honestly, this is one of the most useful lines that I draw on every single chart. It's day 9 out of 15. Let's go. Quick reset here from yesterday. We talked about impulsions and corrections. A swing is where price already turned. Two swings make a segment, and three segments make a trend. Okay, now you can look at a chart and say, that's an uptrend, that's a downtrend, cool. But that's still a bit vague. There are still a few informations there, pieces of informations that are missing, okay? And today we're gonna take all that and break it down to you so you can actually understand everything behind the trends. So here what an uptrend actually is properly this way, okay? Demand is beating supply. There's always more buyers than sellers consistently there. Price is making higher highs and higher lows. The impulsions are to move up, corrections are to move down, but you knew that a little bit already. And because the buyers are in control, the swing lows are controlling the trend. Okay, so if you are in an uptrend, you're only looking to buy. That is somebody else's problem if they're trying to short. Do not try to go against the trend. Okay, if the market is in an uptrend, just follow that trend, join that trend, and take a look at that second video. That's the whole video. Buyers are in control, which means you got to be looking at the lows as well. That's what you have to watch out for. And I want to sit on this for a second because it's backwards from what people do. Everybody watches the highs there in uptrends. Everybody is waiting for a new high so they can go and say, yeah, we're trending here. But think about what the high actually tells you. It tells you that the trend did something in that was seen there on the past tense, correct? It's the history. It's the second print. You know what I'm saying? Because the market will keep doing what it did previously. So if we are in an uptrend, we're most likely going to continue making new higher highs and higher lows, okay? The lows, it's what going to tell you if the trend is alive right now because the lows are controlling that trend, okay? And looking at new highs that are being made and looking at new lows are a complete different question, okay? And that should be the one whether you decide if you're gonna take a trade or not is the swing low still intact or has it been violated? Swing low, what is that? Here we have it, the controlling swing low, and the official version is it's the lowest swing low sitting between the breakout and the nearest swing high, which means nothing for the first time there. You hear it, okay? So let me define it in smaller words. Find where price broke out above the old high, then look back at the last low before that breakout, and that's your level, okay? You see the example here in a uptrend, and it's the higher low, correct? Not the original low way back at the start of the move. No, this is just the higher low, and people get that wrong. They consistently switch the lows and they end up with the stop too wide, okay? But here it is, controlling swing low, that's your level. Remember when I said three segments to make a trend? Well, let me show you how an uptrend gets born because it explains why that level is also where it is, okay? So here we have three segments and they happen in order, okay? They have to happen in order there. Segment number one, it's a up segment starting from a swing low. Segment number two, a down segment that does not cross below that swing low, and number three is a up segment that crosses above the previous swing high. Okay, all three in that order, and now you have an uptrend. Not before, no, not it's kind of going to go up. No, after we get the breakout there, you get the confirmation that we have an uptrend. And after we break above the high, we get the third segment that we call the breakout segment. It is the segment connected to your controlling swing low, and it's the one that pushed above the old high. And it matters because that's the segment that proved that buyers were still there. Everything else is price just moving around in in a range there. There's no evidence, okay? So you want to remember this box, the breakout segment. On day 11, I'm going to show you that the only zones trading inside a uptrend, okay, are the ones inside the breakout segment. And the level moves, it goes up. Every time price crosses the most recent high, the most recent swing low becomes your new controlling low. So as we make new higher highs and higher lows, the levels also climb, okay? Each push is gonna drag the level up. So it only ever goes up because we are in a uptrend. It never goes down. And it's a gift in a way because the longer you think about it, the longer this trend is gonna run, right? The longer it's gonna take for your trade there, for your invalidation to come. And you're only risking as the move goes on. If the move, whenever the move stops there, the uptrend stops, you are done because the uptrend got terminated. So you are essentially risking there less and risking only when you have certain parameters. And here's the title of the video, most likely the part you came for, okay? When price crosses below the controlling swing low, what happens? The uptrend is terminated. It doesn't, it's not weakening. No, it's not showing signs. It's not looking shaky. No, it's terminated. It's over, okay? There is no more uptrend. And once a trend gets terminated, that turns into a range, okay? Going up is not the dominant direction anymore, so it stops being an odds enhancers there for your longs, okay? If your buys are not with a trend behind it, it most likely won't work, okay? So you have to make sure you're always trading with the uptrends because once they get terminated there, it's over. We are in a range and momentum can keep on going lower. But that's why I left this level so much. You don't have to predict the top. You don't have to be clever. No, you don't even have an opinion pretty much. You just gotta watch out for when price breaks under that low and you know exactly what it means. The up momentum, it's over. So how do you find it on a live chart? Here are 5 steps. One, you start at current price and always go from right to left, same as everything else in the system, okay? You want to look down and left for the most recent swing low. You want to place a vertical line on it. You want to keep going left to the next lower or equal swing low. Then you want to place a second vertical line. Okay? After that, you want to place a horizontal line on the highest price between those two lines. And then you're going to check two things. Has price crossed above that swing high? And has it stayed above the higher swing low? If both are true, then you have an uptrend. And that higher low is your controlling swing low. If they are not both true, just repeat the steps until they are. Now, here's the shortcut I actually use every day. It may take you some time, but it's really good. Boxes, okay? Green box on every segment up and red box on every down segment there. You want to draw the last 3 and the trend goes from something you're kind of confused to something that's actually obvious there right in front of you, and it's just a staircase, okay? And there's one rule: the boxes have to connect at one corner where the segment ends and where the next one starts, okay? And that can be an error check there for you, which might be useful, okay? Because if the two boxes are not touching, you marked the swing wrong, okay? You want to go back and fix it, just don't carry on because it's not correct. And with time and experience, once you've done this 100 times, it's only going to come down to three steps. You want to start at current price, draw the three most recent segments, boxes, lines, whatever you see the quickest, and just confirm whether it's valid or not. Higher lows, higher highs, price is still above the controlling swing low. Great, that's an uptrend. And it's gonna take you about 10 seconds once you have it matched. So here's the rule: one price above it, you're long, you're fine. The uptrend is still holding. Once we go under that price, you are out, okay? You don't need to guess where the top is. You don't need to be smart about it. No, you just need to mark out the controlling swing low. And while price is above it, buyers are still in control. So you just want to follow the trend behind it. Okay, and the second we break that, it stops being true. You stop going in that direction. Three things we talked about today. In a uptrend, the lows control, not the highs. Okay, the controlling swing low is the last low before the breakout above the old high, and it's the higher low, not the original one. And it goes up on every single high and higher low that price makes. Crossing below it, we terminate the trend. Okay, you want to mark it on every chart you open, genuinely every one, and it's the single most useful line you can draw on every chart. That's day 9. Tomorrow we're going to talk about the downtrend, and it's the same thing, just completely flipped, okay? The highs control instead of the lows, and there's a level doing the exact same job on the other side. We have 6 more of these, and I'll see you tomorrow.